What if I told you that the one asset you thought was your escape hatch from Wall Street just became Wall Street? Bitcoin dropped to $68,000 right alongside a tech-led sell-off. And suddenly, the great uncorrelated hedge is moving in lockstep with the Nasdaq. We're not talking about a minor blip here. The correlation between Bitcoin and the Nasdaq flipped from negative 0.68 to positive 0.72 since February 3rd, which is one of the most dramatic statistical reversals you'll see in modern markets. That's not a drift, that's a full personality transplant, and you deserve to understand exactly why it happened. Think of Bitcoin like that friend who swore they'd never become their parents, and then you visited their house, and they had a mortgage, a Costco membership, and strong opinions about lawn fertilizer. The same institutional money that piles into Nvidia and Meta is now flowing into Bitcoin ETFs. And when those investors get scared, they sell everything in the same breath. The crypto ETF wave was supposed to be Bitcoin's coronation moment, its grand arrival into the halls of legitimate finance. But here's the irony. Nobody wants to say out loud the very thing that legitimized Bitcoin is also what chained it to. The same risk-off behavior that drags tech stocks down every time the Fed sneezes. There's also the algorithmic trading layer that most retail investors completely ignore, where quant funds and systematic strategies treat Bitcoin like a high beta tech proxy and rebalance accordingly the moment correlations shift. When macro risk sentiment sours, these algorithms don't ask philosophical questions about sound money, they just sell the riskiest stuff first. And Bitcoin is sitting right at the top of that list. We used to celebrate headlines like Bitcoin decouples from equities, the way people celebrate a toddler's first steps, proud, excited, convinced this was the beginning of something permanent. But that optimism aged about as well as a 2021 NFT of a cartoon rock. Because here we are again, watching BTC and QQQ trade like they share a heartbeat. The historical record is actually pretty humbling on this point. Bitcoin's correlation with equities has oscillated wildly over the past decade, spiking during the March 2020 COVID crash, and again during the 2022 rate hike bloodbath. Every cycle feels different when you're in it, but the pattern of risk-off means sell everything, including Bitcoin, keeps showing up like an uninvited guest at every financial party. Here's the misconception worth killing right now. Bitcoin being correlated with tech doesn't mean it's broken or that the long-term thesis is dead. It means that in the short to medium term, it behaves like a high beta growth asset. And that's actually a rational outcome when the marginal buyer is a hedge fund manager with a risk budget, not a cypherpunk with a cold wallet. Portfolio diversification math starts to break down the moment your uncorrelated asset starts moving in sync with everything else you already own. If you were holding Bitcoin as a hedge against a tech sell-off, February just proved that hedge didn't work. And pretending otherwise would be like buying flood insurance that only pays out on sunny days. The practical lesson from history is embarrassingly simple. Size your Bitcoin position as if it's a high volatility tech equity, not as if it's digital gold sitting quietly in a vault. That means smaller allocations if you're already heavy in tech. And it means not doubling down emotionally just because you believe in the long-term narrative. Disciplined investors don't abandon an asset class because it correlated during a rough patch. They adjust position sizing, review their hedging assumptions, and avoid the cardinal sin of conflating conviction with strategy. Process beats prophecy every single time. And the traders who survive these correlation shifts are the ones who plan for them before they happened, not after. There's a certain poetic absurdity in watching Bitcoin, born from a distrust of centralized financial systems, become so deeply enmeshed in those same systems that it now sneezes when Morgan Stanley catches a cold. But maybe that's not a tragedy. Maybe that's just what adoption looks like when it actually arrives. Messy and complicated, and nothing like the white paper imagined. The philosophical takeaway is quieter than the drama surrounding it. Discipline, sizing, and consistency matter more than being right about any single asset's identity or destiny. Whether Bitcoin returns to being an uncorrelated store of value or becomes a permanent high beta tech proxy, the investors who approach it with rational preparation and humble position management will be the ones still standing when the dust settles. And if you're ready to put disciplined, process-driven thinking to work beyond just crypto, whether that's real estate investing, home contracting, or finding the right lenders. Check out our links in the description below, and let's help you get started.